Welcome back traders and you techies too. Today we're focused on the stock everyone's talking about, Nvidia's massive stock price rise. Buckle up because we're about to dissect this boom, analysing the causes, exploring potential risks, and most importantly, helping you navigate this exciting yet potentially treacherous landscape. Let's start with the numbers that are turning heads. Nvidia's stock price has gone absolutely ballistic, skyrocketing over 500% in the past 16 months since October 2022. Now that's not an exaggeration, and this isn't a short-lived blip. It's a sustained climb fueled by several key factors. So let's take a look at those. First up, there's the gaming juggernaut that we all know and love, isn't there? Demand for high-end graphics cards is booming, thanks to the insatiable appetite of gamers and the explosive rise of cloud gaming. But that's just really the tip of the iceberg. Nvidia's real secret sauce lies in its diversification beyond gaming. Enter the realms of artificial intelligence, data centers, and the metaverse. Nvidia's powerful GPUs, that's graphics processing units for the uninitiated, are the beating hearts of these cutting-edge technologies. They're powering AI research, training self-driving cars, and even building the virtual worlds of the metaverse. This diversification has unlocked a massive new market for Nvidia, propelling their growth like a rocket. Now, before we all get too excited and we jump on the bandwagon, let's talk about the risks. The semiconductor industry is notoriously cyclical, meaning downturns are inevitable. And with such high valuation, even a small misstep could lead to a significant price correction. Remember, stocks don't always go up, they often go down, and when they do, they can go down really fast. So what do the experts say about Nvidia at the moment? Well, the analysts are a little bit of a divided bunch, as they always tend to be, because no one really has a crystal ball to know the future. Some analysts are gung-ho bulls, confident in Nvidia's long-term potential and urging investors to buy and get in right now. Others are more cautious though, suggesting a hold until the valuation cools down. And there are a few that are even advising their clients to sell. They're worried about the bubble bursting any time now. For us and our mechanical systems SPA3 investor, SPA being short for Sustained Profit Advantage, it's currently showing a hold on Nvidia. We bought it a while back and we've had a fantastic run on it already. The great thing is we're not worried about a potential crash because we know exactly when we get out, and that'll be when we get a sell signal. Our predefined rules give us the buy and sell signal, so we always know what to do at all times, meaning we're confident in our decisions and at peace with the market always. So what should you do right now, you might be asking? Ultimately, the decision lies on your shoulders. Do your research, understand your risk tolerance, and don't get swept away by the hype. Remember, investing is a marathon, it's not a sprint. Chasing quick profits can lead to costly mistakes. The best thing that you can do is to have a plan before you go in, and then have a trained mindset to stick to that plan at all times. Any other way of doing it is pretty much gambling. So join us in the comments below, share your thoughts on the Nvidia boom. Are you tempted to invest? Are you already in and you're loving the run it's having? And what are your concerns about Nvidia? While you're there, don't forget to like this video and subscribe to our channel for more market insights. And if you want to go that extra step and learn how to trade properly, you can also download our free ebook, From Flustered to Unflappable Trading by Gary Stone. It's an easy read and you'll learn heaps about the market and where you currently are as a trader. Well, that's it for today. Please remember that this video is for education purposes only and shouldn't be considered advice to buy, hold or sell any particular instrument in the market, and that of course past performance is not a true indication of future performance. Thanks for watching, and I look forward to showing you around the markets again next time. Until then, I wish you consistent, objective and peaceful investing. Bye for now.